So you're doing all the work to earn all of your income. You're being told by the financial entertainers out there that you need to store your money inside of things like mutual funds and stocks and bonds and all of these financial instruments. And the moment you do that, you've transferred all the control. You don't have access to the capital without penalty or without having to free that money from that financial prison. That puts you at a disadvantage, and it puts the banking system and the bankers at full advantage. When you're in a position of total and absolute control financially, you're not going to be worried about whether the economy is expanding or receding, whether the stock market is rising or falling, whether the real estate cycle is in your favor. That won't matter to you. I'd like you to think about this question. Who revolutionized the automobile industry with the Model T? Henry Ford. Now, who created amusement parks and pioneered cartoon films, including Mickey Mouse? Walt Disney. Now, here's a trick question for everybody. Who revolutionized a process to enable you to become your own banker? R. Nelson Nash. And what I want to share with you is something that really impacted me the first time Nelson shared this. And he often said that after taking the better part of 13 years to get rid of the bankers in his life, that after that time, he was experiencing a very peaceful, stress-free way of life financially. And when you get the bankers out of your life, you can also experience that same peaceful, stress-free way of life. And I am living proof of that, along with clients of ours coast to coast and soon to be in the province of Quebec. We're beyond excited to be able to share this amazing process and concept with you. But it's super important to know who developed it. And by the end of this webinar, so by the end of the 90 minutes that we spend together this evening, you will know that you are capable of doing this, that you are capable of becoming your own banker. You'll have clarity on the problem. The solution will become clear to you, and you'll know what exactly it is that you can do to implement this process in your personal life, in your business, or a combination of both. And you'll also feel like a recent attendee who sent us feedback after having attended to say, I found hope. I found a new way and a new belief that I could create my own peaceful, stress-free way of life. All of this begins with the desire to change, the desire to create this peaceful, stress-free way of life. And what is the opposite of stress-free? I don't know about all of you, but I've personally experienced this myself in stress. We're all human, right? We all experience stress. And what is the leading cause of medical maladies in human beings? Stress. And what's one of the leading causes of stress? Financial difficulty or money. There are couples, husbands and wives, partners who are arguing about money right now in this country as you're here attending this webinar. So let's help you to create your peaceful, stress-free way of life. And we know that you've been told, you've heard this so many times, just tune into the media, visit your corner bank, talk to a broker. You've been told to put your money away in things like mutual funds, commodities, stocks, bonds. And so by doing that, you're handing control over the motion of that money over to someone else who gains control over the motion of that money. You're essentially trapping your money in financial prison. And then when you need access to money to finance the things that you need in life, you have to go to someone else's bank to access more money. It's absurd. So you're doing all the work to earn all of your income. You're being told by the financial entertainers out there that you need to store your money inside of things like mutual funds and stocks and bonds and all of these financial instruments. And in order to do that, you have to hand control of your money over to someone else who thinks they can do better with it than you can. And the moment you do that, you've transferred all the control. You don't have access to the capital without penalty or without having to free that money from that financial prison. That puts you at a disadvantage, and it puts the banking system and the bankers at full advantage. And so we just want to reverse that. We want to put you in a position of total advantage so that you can create your peaceful, stress-free way of life. And I'm telling you, and I'm speaking directly to you, that if you've been handing control of your money over to someone else who thinks they can do better with it than you can, you may not be in the best situation right now. And that is something that we experience with people so often, but it's not your fault. It's going to be okay. Are you committed to discovering how becoming your own banker can be an advantage in your life? And are you willing to commit to improve anything that you're now doing financially that may be preventing you from becoming your own banker? All right. Well, welcome to Commitment, because over the next 90 minutes, we hope you enjoy your stay. Now, personally, in my own life, I did not grow up in an affluent or wealthy family. I was born and raised in Timmins, Ontario, which is predominantly a mining and forestry community. And in the early 1980s, I was a toddler at that time, and inflation skyrocketed. So interest rates peaked at 21.5% if you were a prime customer. And I haven't met anybody who's prime. I know a lot of people who are prime plus, but I've never met anybody who's prime. And back in the early 1980s, my parents argued all the time about money. The memories that I have around topics of financial discussion in our home were not pleasant memories. They were very painful memories. And that brings back for me just a lot of trauma. And there was nobody in my life. There was nobody to mentor me on how to not only accumulate money, but how to multiply that money and how to keep that money in the family. And you may be experiencing something similar in your upbringing as it relates to money. Some of you may be and may come from affluence and from wealth. Regardless of what stage you are at or what your upbringing was or what your experience is with money, you're going to need the use of it for the rest of your lifetime. And the real question is, who is the banker in your life today? If it isn't you, then it should be. That's where the banking function should be held. It should be held at the you and me level. And my own journey with this process, having practiced it now for the past 14 years, is that you can absolutely achieve becoming your own banker. It just takes time. There's no instant gratification here this evening. There's no instant gratification in the implementation of the process. We live in a society where we expect instant gratification. We want instant food. We want instant product delivery. We want instant access to movies and video on demand, and everything's built around instant gratification. As it relates to the implementation of this process, this is going to happen for you incrementally and gradually over a period of time. And you're going to see through real example this evening just how much of an advantage it can be for you and for your own family. Now, most people believe that they need someone else to take care of their money. And most people believe that it's necessary to risk their money in order to grow it. And most people know next to nothing about the process of banking and the importance to their lives and to their well-being. Here are some fundamental truths. The first truth is that the difference between you getting stressed or staying relaxed financially is who controls the banking function in your life. That's truth number one. Truth number two is that you don't have to put your money away in prison for decades and rely upon someone else to achieve the financial abundance that you deserve today. That's fundamental truth number two. And number three is that you don't have to be rich to become your own banker. That's fundamental truth number three. I don't care if you're making $10 an hour or you're making $10,000 an hour. Once you understand this process, you'll have an obligation to implement this in your family and in your business. You do not have to be rich to do this. Who is this process for? The answer should be obvious. It's for you. You're going to need to use some money. I'm going to need to use some money for the rest of their lifetimes. And if you're not controlling the banking function as it relates to your needs, then what you're doing is you're enriching others. You're enriching the bankers. You're enriching the bank owners who own the bank. But you're taking all that financial energy away from your family unnecessarily. Infinite banking got started during that period of time that I shared with you earlier. That was very traumatizing for me. In the early 1980s, our Nelson Nash found himself in a very bad circumstance financially. He owed $500,000 in mortgage debt in the early 1980s. Now, he was borrowing money to finance his real estate investment portfolio initially at rates at around 8-9%. When inflation peaked and interest rates skyrocketed, Nelson found himself owing more than 22% interest on these mortgages. That obviously created a very stressful situation for him. What he didn't realize is that he had the solution to the problem right in front of him. He had already amassed a system of dividend-paying participating whole life insurance policies. And what he wasn't thinking about is that he could access money directly from the life insurance companies between 5 to 8% to pay off the snakes and dragons, as he referred to them as, who were charging him more than 22% interest. Once that solution became clear to him, he realized that he needed to add more policies to his system. He needed to crank up more life insurance premium to expand his banking system. It took him and his wife, Mary, 13 years to get rid of the banks. Now, what many people don't know is that Nelson had a joint venture partner, a very prominent lawyer who resided in the very same city, and that lawyer invested in real estate projects with Nelson. Now, that lawyer in the early 1980s filed for bankruptcy. That left Nelson in a very bad spot. He could have filed for bankruptcy. He chose not to. And not only did he not file for bankruptcy, and not only did he get rid of the banks in 13 years, he also paid off the lawyer's share of the debt. But he had a life insurance policy on the life of that lawyer. And many years later, when that attorney passed away, Nelson was reimbursed for everything that he had to pay out of pocket to take care of that attorney's share of that real estate. Now, people were telling Nelson at the time, why don't you just sell the real estate? And he thought to himself, what fool is going to buy this real estate from me if they know that they have to finance it at such ridiculous rates of interest? So after that 13-year period, when he got rid of the snakes and dragons altogether, him and his wife, Mary, did not see a commercial bank for anything other than the convenience of debit for the rest of Nelson's lifetime. Sadly, Nelson passed away in March of 2019, but for so many years, he did not have to rely upon someone else to create the financial abundance that he deserved. He took care of it on his own by taking control of the function of banking as it related to his needs. You're going to discover how to do that as well. Now, everybody needs a heart. I hope that we can all agree on that. And I want to tell you a story. Gosh, Nelson had to have his heart replumbed in 4 different places. And when he was going through surgery, they actually had to remove his heart from his chest cavity. And he was being kept alive by a heart and lung machine. And obviously, he doesn't remember the experience because he was under anesthetic. But what he often said about that is he said, you know, even though I was being kept alive by a heart and lung machine, I wasn't truly living. I was merely existing. Now, I want you to think about this because the analogy that Nelson shared is that's the equivalent of what most people are doing as it relates to the banking function in their lives. They're not only abdicating the responsibility of banking, but they're abdicating the opportunity that it represents. And that's the equivalent of living off of a heart and lung machine. Think about the financial system, the banking system. It's much like a heart and lung machine. The banking system pumps the money to where it's needed the most. And at some point, that money flows through your hands and mine, right? Well, if you're dependent upon someone else to perform that function for you, then that's the equivalent of living off of a heart and lung machine. Now, we know that banking is the most important business in the world. Without it, all financial business comes to a grinding halt, and so does every other business. Because money that isn't in constant motion isn't worth anything. And if you think back to the financial crisis of 2008, 2009, that's what occurred. The banks stopped moving money. They stopped lending. And so if you think about your personal financial situation, you want to keep your money in constant motion, and you want to be in total and absolute control of that function. What I would ask of you is that if you think about all of the money that you earn, so all of the income, regardless of the source, you earn T4 income, you earn interest income, rental income, dividend income, a combination of all the above. Where does all that money end up? Any guesses? It ends up right back in the banking system. The issue here is how much of that function do you control as it relates to your needs? Now, I want you to remember that there's only one pool of money in the world. It's inconsequential that we have many different banking institutions, that there are many different currencies on planet Earth, but there's only one pool of money. Much like if you think of, there's only one body of water. If someone believed that there was a difference between the Indian Ocean and the Amazon River, then they may not understand what's really truly happening. Think about how water vapor is created, how the wind picks up that water vapor, clouds form, the wind currents move those clouds, the clouds precipitate in the form of snow, hail, rain. The human body is primarily comprised of water. We consume it, we expel it. It's all in constant motion. And so where does it all end up? It all ends up right back in the rivers, oceans, streams, lakes, etc. But I want you to think about this. If you've ever seen a body of stagnant water, would you ever drink or eat anything that came out of stagnant water? Absolutely not, because not only could it make you very sick, but it could actually potentially be fatal. And so I want you to remember that motion is a natural law. If blood doesn't circulate through your body and mine, we die. If air doesn't circulate through the atmosphere, all life on planet Earth dies. If water isn't in constant motion, all life on planet Earth dies. If the banking system isn't constantly moving capital, the financial system dies. And what Nelson saw is that he was pumping money into that system the wrong way. He had to go through the bankers, toll takers, gatekeepers, people who were all making money off of him and abusing him. Think about your experience with bankers up to this point in your life. Has that ever happened to you? What Nelson realized is that he needed to crank up very large life insurance premiums, expand his system, and you can't get that done overnight. Even his wife thought that he was crazy when he described to her what the solution to the problem was. He described the problem as, I'm doing all the work, everyone else is getting all of my money, I'm not in a position of control, interest rates have skyrocketed, something I cannot control, I need to get myself out of this mess, I need to solve this problem. He had the solution right in front of him. And once he understood the problem, the solution became clear and he knew exactly what to do. I'm going to share with you something that Nelson described in his book titled Becoming Your Own Banker. Now, in that book, Nelson talks about understanding who the characters are in the financial play. And he said what's most important is that most human beings have no idea that there are characters in the financial play, and most human beings have no idea that there's even a play going on. He said in his book, and I quote, "Most people don't understand it. Worse than that, they can't get the characters in the play straight. People just don't play their proper role in the scheme of things. They have abdicated their opportunity and responsibility as it pertains to the banking function in the economy. They are depending upon someone else to perform that job, and that character in the play is making most of the money, and rightly so, because of the golden rule. Those who have the gold make the rules. It can be no other way." So here are the four characters in the financial play. The first character is the depositor. The moment that money lands in your bank account, whether it's automatically deposited or manually deposited, you are a depositor. Whenever you make a bill payment, you're making a deposit into someone else's system. The second character is the borrower. You are also all borrowers. Whenever you need access to capital and you got to access it from someone else's pile of money, you are the borrower. Whenever you save up cash and pay cash for things, you're also working with borrowed money. The third character is the banker. The banker gets to decide who gets access to the pile of money. The fourth character is the bank owner. The bank owner is the character in the play who makes the most money. Think about the commercial banking system. The bank owner would be the stockholder of the bank. Now, if you're only two of the four characters in the financial play, then someone else is getting all of your financial energy and someone else is being enriched because you're transferring all that money away from your family and away from your business. When you become all four characters in the financial play, you will create your peaceful, stress-free way of life financially, but you'll also create indestructible wealth. I say that again, indestructible wealth. And when you're in a position of total and absolute control financially, you're not going to be worried about whether the economy is expanding or receding, whether the stock market is rising or falling, whether the real estate cycle is in your favor, whether there's a pandemic or not, whether the federal government is going to increase taxes. That won't matter to you because you're going to be in a position of total and absolute control. Now, the person on the street in Canada today understands this subject so poorly that he's doing the equivalent of living off a heart and lung machine. So what I'm going to ask you to do is make that decision tonight to stop living off of the financial heart and lung machine and start taking control of this function in your life. And I'm going to talk to you about how you can do that, how you can control the banking function. Now, this book that you see has sold more than 500,000 copies, and it's self-published. I don't know of any other self-published author who has sold 5,000 copies, let alone 500,000 copies. Now, there's a reason why this many copies have sold, because it works. The process works. And I would encourage you, if you have not read this book, make sure that you order a copy of the book. It's 92 pages. And we courier the book to anywhere in Canada. So we don't send it by regular mail. We will courier it to wherever you want it delivered. This book will take you the better part of an afternoon to read, and it will transform your life, I promise you. This book is an absolute must-have in your library. Now, you would have already received a link and a link in an email. So you would have gotten a text message and an email where you can click on that link and order your copy. And if you're feeling inspired and in a giving mood, get a copy for someone who you think would benefit from the gift of this knowledge. Now, the very first principle that must be understood as it relates to this process, the very first principle that you must understand is that you finance everything that you buy, meaning you either pay interest to someone else to gain access to their pile of money, or you give up the interest that your cash could have otherwise earned. So if you're accustomed to paying cash for things and you're saving up money in someone else's bank, and then you're withdrawing that money to pay for the things that you need, you are giving up the opportunity to earn interest on that money for the rest of your lifetime and every generation that comes after you. And what you're doing is you're giving that interest earning power to someone else. So what I'm sharing with you this evening and going to implore you to do is to stop transferring the financial energy and the interest earning power to someone else. Keep that interest earning power inside of your system. Now, there are no exceptions to this rule. You'll hear me say that you either pay up or you give up. There are no exceptions. Now, a lot of people may be familiar with the term lost opportunity cost, which is what I just described, but very few people actually reckon with it. A lot of people pay lip service to it, but so few actually reckon with it. Tonight, you're going to reckon with it. The whole idea of the process of becoming your own banker, the infinite banking concept, is to recapture the interest, the money that you're presently paying to banks, to finance companies, for all the major items that you need throughout your lifetime. And the objective is to keep that money in your family and prevent it from flowing away from your family. Now, someone has to perform this function in your life, and it should be you. This process is not an either or. So I don't want you to be thinking that I'm either going to invest in cryptocurrency or become my own banker. I'm either going to invest in real estate or become my own banker. This process is not an either or. Becoming your own banker is not a product, and it's certainly not about addressing the yield of an investment. This process is all about how you go about financing the things that you need in life, which can certainly include investment. And when you think about investing money, you think about a rate of return. Well, you can't get a better rate of return doing anything if you're not controlling the banking function as it relates to that investment that you want to finance. Take control of this and your life changes for the better. Now, I want to talk a little bit about getting into the grocery store business. Now, I know some of you are immediately thinking, I came here tonight to discover the process of becoming your own banker. Why on earth are you talking about getting into the grocery store business? I think this will be abundantly clear at the end of this example. Nelson often said that once you understand the grocery store, the rest of becoming your own banker is ridiculously simple. So let's talk about it. I'm going to put all of you into the grocery store business, okay? Now, we're going to consider that this is a business in which we're both the buyer and the seller of a product because everybody needs groceries, right? So our marketplace is unlimited. Someone has to perform the function of distribution. The food has to be distributed to the consumer. The food has to be distributed from the manufacturer to the grocery store. So someone has to perform that function. Now, think about all of this as it relates to the banking business. You're here tonight to discover the process, and then you'll set about studying how to get into the banking business in your personal life and in your own company if you're a business owner. Your market is also unlimited. Everybody needs the use of money, especially those who are in your family or in your business. Someone has to perform that function of getting the money where it needs to go, pumping that money to where it's needed the most. That person can be you. Now, we got to study the business, in this case, the grocery store business, for a period of 2 years. We got to buy a superior location. We have to build an attractive building. We have to stock it with high quality merchandise. Now, this all takes time and money, but how much money has our grocery store made up to this point? Any guesses? Nothing at all, because we haven't opened up the doors to customers yet. Everything involves motion. Remember what I said earlier, motion is a natural law. And so imagine in the grocery store, if you had all that bread, butter, eggs, milk, if all of that product just sat still on the shelf and didn't move, it would spoil and your business would lose money. If you turn your inventory over 15 times every year in the grocery store business, you'll break even. If you turn over the inventory 17 times, you'll be pretty profitable. If you can turn it over 20 times, you can retire early. And so when you think about building your banking system, you need to be thinking about motion as a natural law. You want to keep money in constant motion, and you want your family banking system to prosper. And so you don't want to be accessing loans from your system and not repaying them. That would be the equivalent of stealing food from your own grocery store business. So think about this. I'm going to boil this down to a very simple example using a can of peas, because Nelson often used the expression, don't steal the peas. Here's what he meant by that. If we could purchase a can of peas at wholesale at a cost of 57 cents and then sell that can of peas out the front door at retail for 60 cents, well, we made 3 pennies for every can of peas that we sold. And most people don't know just how little the margins are in a grocery store business. If you're the owner of this grocery store, you call the shots, right? So you're in charge. You're the one that decides what happens, when it happens, and so on. Being that you're the owner of this business, if your spouse shopped at your grocery store, would your spouse go out the front door and pay retail? Or would your spouse take the can of peas out the back door and not pay anything because you're the owner of the business? Let's presume for a moment that your spouse took that can of peas and walked out the back door. We only make 3 pennies on every can of peas that we sell. So if your spouse did that, we would have to sell 20 cans of peas just to make up for the 1 can that walked out the back door. And if your employees see that happening, what are they going to do? They're going to start walking out the back door with peas and other items as well. If you want a fun thought experiment, just make friends with somebody who owns a retail business or a grocery store and ask them what percentage of theft is internal. They're going to tell you the majority of it. And so think about this as it relates to creating your own banking system. If you're accessing policy loans and not repaying them, that's the equivalent of walking out the back door with the can of peas, or a more accurate description, stealing. So when Nelson says, don't steal the peas, this is what he means. As the owner of the grocery store, not only should you pay retail just like every other customer, but you should also put a few extra pennies into the cash register. Because when you do that, you're making your grocery store business much more profitable, and you're also able to buy more cans of peas to sell to more captive customers. And I haven't met a grocery store owner yet who has ever complained about having more shelf space to stock with more product to sell to more customers. And so as it relates to your family banking system, whenever you access policy loans and you are an honest business owner and you're going to repay your system, because remember, your family banking system is a business, so you should treat it that way. Treat it like the grocery store. Not only should you repay your policy loans, but you should put a little bit extra capital into your system so that you can expand it, create more abundance for your family, and have more capital available when it's needed, not only for you, but for anyone else who co-owns the grocery store. Once you understand the grocery store example, the rest of becoming your own banker is ridiculously simple. Don't steal the peas. Now, here's the problem. Wherever wealth resides, someone will try to steal it. I want you to think about financial instruments like registered retirement savings plans. The moment you create that, you're on the government's radar. I want you to think about storing your capital in someone else's system. Whenever you have money deposited on the books of someone else's bank, that's not your money anymore. You just become an unsecured creditor of the bank. So now you're in a position of not being in control. When you begin accumulating money inside of a policy, a dividend-paying participating whole life policy, or a system of policies, you're putting yourself in a position of total and absolute control. Here's the process. You earn an income. Your income gets deposited into someone else's bank. I say that again, someone else's bank. The money sits there waiting for you to pay your bills. Now, I think that you would agree, your bank is not letting your money sit still, because motion is a natural law. The bank has to keep that money in constant motion. Your savings account, your savings, your checking account balance, those are all liabilities to your bank, because your bank doesn't know when you're going to come in and demand some or all of that money. So they have to keep it in constant motion. In other words, you're doing all the work and everyone else is getting all of your money. How does that make you feel? Maybe like this. I want you to understand that I talk to people every single day, and people say to me, I prefer to save my money. I don't like being in debt. I don't like loans. I don't like debt. Well, I take them through this very same exercise that I'm about to lead you through right now. I want you to think about two different people. One person is a debtor and the other person is the saver, the one that I just described. Now, the debtor sees the interest that they're paying, right? Because it's part of their payment. When the debtor needs access to money to finance the things that they need in life, they have to go to someone else's bank. So they start at a $0 balance right here. Then they're negative because they owe money to someone else's system. And every payment that they're making is a deposit into someone else's bank. And they see the interest component because it's part of their payment. Now, they don't own the thing that they purchased until they make the final payment. And they end up where? Right back at zero. Now, let's contrast that with the saver. The saver also starts at zero, and the saver needs to begin storing money in someone else's system. And so every deposit is increasing the financial energy for someone else, because your money is not sitting still when you save it in someone else's bank. And then when you've piled up enough money to go buy that very same thing that the debtor purchased, you need to withdraw the money from your account, which brings you right back down to zero as well. So what's the difference between these two people? The difference is that the saver does not see the interest that they're giving up the opportunity to earn, not only for the rest of your lifetime, but for every generation that comes after you. Not the best financial position to be in, because both methods involve a permanent transfer of money away from you, away. Let's get that financial energy flowing back to your family. The solution is the process of becoming your own banker. Now, we understand the fundamental truth. Your money must reside somewhere. So what we're going to do is we're going to go through a fun thought experiment together. I want you to think about being able to construct the perfect asset, the perfect investment. Now, this is going to be an asset that you design from scratch. Now, this asset can have no drawbacks, okay? I'd like you to describe to me what attributes this perfect investment has. Now, I'll kickstart the thinking around this with some of the most frequent responses that we've received over the years that we asked this question. Some of the most frequent responses include a high rate of return, safe, conservative, tax-free. Here are the most common responses that we've received to this thought experiment over the years. Here we go. High rate of return, consistent rate of return, conservative, liquid, guaranteed, tax benefits or tax-free, no market volatility, yields income besides capital gain, creditor protected, inflation protected, control, transferable, easy to manage, no hidden fees or penalties, reputable, private. Here's what I'd like you to do. I'd like you to simply identify, if you were to look at all of the assets that you possess today, I want you to identify which of the features from this list that your assets are currently doing well on, and which of the features your assets are currently failing to satisfy. Look at all of your assets that you possess, your home, your cars, your stock accounts, your mutual funds, all of these different things, and identify what are the features of this list that they do well on and which features they fail to satisfy. Here's a surprise for everybody. That list of attributes that you just saw most accurately describes a participating dividend-paying whole life policy. Let's break down the components of this contract. The first component is participating. That means that you become a part owner of the life insurance company and you participate in the profits generated from every product, from every line of business that the insurance company operates in. Second, dividend paying. This means that every year that the life insurance company declares a dividend, that dividend is contractually guaranteed to be paid to the participating policy owners, and those dividends can never be repossessed and they can never lose value. Isn't that good? And then whole life. You're insured for your whole life, all the way to age 100 and beyond, regardless of how long you live. The total cash value of the policy, which grows daily, must equal the total death benefit by age 100. So that means every single day you're aging, your total cash value in the policy is increasing and it cannot go backward. Whether the stock market rises or falls, your cash value goes up. Whether the economy recedes or expands, your cash value goes up. Whether the real estate cycle works in your favor or against you, your cash values go up. Whether tax rates increase or decrease, your cash values go up. That is where your capitals should reside. And then from that place, you can finance the things that you need in life, including investments. If you enjoy investing capital, keep doing that. Just take control of this function as it relates to your needs first. Now, we know that there aren't really many financial guarantees that exist in life anymore. Pensions are going by the wayside. There's obviously doubt about the future, especially with the increasing global conflict and global financial situation. However, dividend-paying participating whole life insurance can help create that peace of mind for you financially, and here's how. As I mentioned, the cash value begins accumulating immediately and is contractually guaranteed to grow every day. Cash values cannot go down. You have easy access to and control over a growing pool of financial value that you can use to take advantage of high caliber opportunities that will absolutely track you down. You're not penalized for accessing capital early like you are inside of a RSP or other financial products. And there are several tax advantages, both personally and corporately, especially if you're thinking about how to create what the insurance carrier aptly named an insured retirement solution. It also provides a growing death benefit, which is paid to your named beneficiaries, income tax-free. I say that again, income tax-free. And all of the daily growth of cash value attracts no tax. The dividends that we use and chunk right back into the policy to increase paid up additions, those dividends trigger no tax. How many of you are liking those attributes up to this point? What I want you to be thinking about is becoming a wealth creator, because you truly are your greatest advantage in this process. Your behavior is far more critical than the behavior of the life insurance company. So we want you to be a wealth creator. What that looks like is that when you are in that position, you're able to create wealth for your family, for your business. This line that you see here, this is your daily cash value increase. It keeps increasing every single day, no matter what. When you need access to capital, you're going to borrow against that accumulating cash value without interrupting it. So you need to go buy whatever it is that you need. Maybe you need to purchase a car. You access a policy loan, and then you repay that policy loan on your terms. I say that again, on your terms, not someone else's. You're the one that's in a position of control. Every payment that you make is a deposit into your system, not someone else's. And all the while, every day that you're driving the car, your total cash value is going up. So you're kind of like an Uber driver, except you never have to pick up any passengers. You're making money every single day that you're driving that car. Isn't that good? The first golden rule is to think long range. Now, what Nelson meant by that is that he wants you to think 3 generations past your own. So not only are you creating a system that you control and that you advantage from throughout the remainder of your lifetime, but you're also transferring wealth to the next generation. I'm not just talking about wealth in terms of dollars. I'm talking about wealth in terms of knowledge, and not only knowledge, but action, because you're teaching your family how to practice this process. Don't keep it to yourself. If you implement it in your own personal life and you don't share it with your family, that's the equivalent of you opening up a Safeway grocery store and not telling anybody in your family that you own a grocery store, and they keep buying all of their food from Walmart. You want your family shopping at your grocery store. You want to make the profit. You don't want someone else to gain that profit. So think long range, think 3 generations past your own. The second golden rule is don't be afraid to capitalize. What that means is that your money must reside somewhere. What better place to have it reside than here? Don't steal the peas. Everybody remembers that one. The fourth golden rule is don't do business with banks. Every time you borrow money from a commercial bank, you're contributing to inflation because the commercial bank lends money into existence. The commercial banking system creates money where no money existed before. The fifth golden rule is to rethink your thinking, but more importantly, to develop the ability to rethink your thinking. It's one thing to say it, it's another thing to develop the ability to actually do it. So let's talk about this. Let's talk about the family banking system. I want you to know that the power of doing this process, especially in family banking, the power is entirely yours. You want to create this system so that money is in constant motion, but it's kept inside your family. Nelson said, you have got to learn how to run a business. Now, what I'm going to show to you is I'm going to show to you an image of a tree stump. Now, the reason I want you to see this is because I want you to know the power of this process from firsthand experience. What you're seeing here is a description of one policy in our family banking system. We have 62 policies in our family banking system today. But this particular policy, my wife, Rebecca, and I, we created the policy in 2012. That's the very same year that my twin daughters were born. These are my twins, Caitlin and Charlotte. And we deposited $20,000 a year into this policy. Now, the moment that the policy was created, it was contractually guaranteed to begin accumulating cash value every single day. So in 2013, the first policy anniversary, we received a dividend, and that dividend was chunked right back into the policy to grow the death benefit, to grow the cash value. That's what each ring of the tree stump represents. It represents 1 year of uninterrupted growth. And you've never seen a tree shrink. A tree cannot shrink. Much like your banking system, your policy cannot shrink. It just keeps growing in circumference every single year. In the third policy year, we took a family vacation, our entire family. So we accessed a policy loan from the life insurance company that we get to repay on our terms. We took a beautiful family vacation, received a dividend, chunked that dividend right back into the policy. In 2015, we purchased a Honda Odyssey. It was about a $55,000 purchase. We utilized a policy loan. And remember, this entire time, 100% of our cash value kept rising in the policy every day. When we request policy loans, we're not withdrawing any money from the policy. We're borrowing against that accumulation going on in the policy. The lien for the loan is on the death benefit. The cash value keeps going up. So we bought the car, and then we repaid that policy loan. And then in 2017, we purchased another car, a Ford Explorer, which we still drive to this day. That was about another $55,000. And then in 2018, took another family vacation. 2019, another family vacation. 2020, more dividends, more paid up additions, kept coming in every year. And in 2021, I purchased this Nissan Altima for about $38,000. All of those payments would have otherwise been transferred away from my family and away from my twin daughters, away from my son, away from my oldest daughter, away from my grandkids, away from my great grandkids. But we've reversed that flow. That money is staying in the family. It's not leaving the family. This is something that you can do as well. And what I want you to know is the power of Nelson Nash's second golden rule, which is don't be afraid to capitalize. Here's what's happened inside of that policy. Total premium deposited in 2012 was $20,000. Up to 2022, the total premium cumulatively that's gone in is now $200,000. The death benefit on day one was $721,000. The death benefit in 2022 has grown to $1.114 million, and it's rising every year. The total cash value in the first year was $4,500. The total cash value, it's actually higher today. This was captured several weeks ago. The total cash value is $220,948 and rising every day. The loan balance on day one was zero. The loan balance today is zero. The loan amount available in the first year was $4,050. It's $198,000 a few weeks ago. That number is actually more than $200,000 today. So I have ready access to capital on demand on my terms, and I never interrupt the daily growth of money. So here's a pop quiz for everybody. How much did the total death benefit increase from day 1 through year 10? $393,000. How much tax is due on the daily cash value accumulation and dividends? Now, what was the total cash value growth from day 1 through year 10? The answer is $220,948. Now, did the money for the vacations and cars, did that come out of the policy or did it come from the life insurance company? Which one do you think? Spot on. Now, who controlled the banking function and the repayment schedule of each policy loan? Was it me as the policy owner or was it the life insurance company? It was me. Now, who co-owns the life carrier, which also happens to be the lender? A policy owner. Now, who has access to all the loan amounts repaid plus more? The policy owner. How much total cash value was ever withdrawn from my policy? So how much cash value did I ever withdraw? Zero. Now, when the life insured dies, which in this case is me, I'm the life insured on that policy, will my family get all the money that I ever paid in plus more? Yeah, because remember, $220,000 piled up in cash value. I put $200,000 of premium in. The death benefit grew by more than $393,000. So the family's going to get back everything that I put in plus more. And how much tax is due on the payment of death benefit proceeds? Nothing. How much does it cost you to dream big? Any guesses? Nothing. How much does it cost if you don't? Because we've been taught to limit our thinking. We've been taught to think smaller. Don't set your goals too high. Don't set out to achieve too much. Do you think any banker in the country, including coast to coast, including anywhere in Quebec, do you think there's any banker in Quebec right now sitting down saying, gosh, I think we should set smaller goals and I think that we should aim to achieve less and I think we should aim to earn less money from our depositors and our borrowers? Not a chance. So someone's going to earn that capital. Why not have it be you and your family? It makes perfect sense, doesn't it? Taking action is the only way that you're going to achieve success with this process. It's the only way. You've got to take action. And Nelson said to me prior to him passing, he said, what you've done is you've created a perpetual motion in your family's financial world. And he was so right. Now, if you think about doing this for your children as well, ensuring your children, your grandchildren, etc., there are significant advantages to this plan. The first is that it covers multiple generations, right? So it promotes long-range planning. Underwriting problems are minimized, meaning for young children, it's very easy to receive approvals for life insurance. There's a tax-free buildup of cash values over a very long period of time. The outlay is very small compared with the ultimate yield. The generation paying the premiums can most easily afford them. When death benefit occurs, the system becomes self-sustaining. So when I pass away, when my wife Rebecca passes away, all of that death benefit that comes into the family has now triggered a self-sustaining family banking system because our children can use a portion of that windfall to keep paying the premium in their own system. They can use a portion of that windfall to create more policies for their kids and their grandkids, and the process goes on. It precludes any need for Social Security programs. Passive income is assured and guaranteed. Estate planning is greatly simplified, and that wealth mentality is transferred to succeeding generations over a long period of time to produce this consistent understanding of becoming your own banker. They're truly learning a process. They're not buying a product, and it promotes what the understanding of stewardship truly is all about. Now, these are my 4 kids, and all 4 of my children have 5 policies on their lives already. We teach our kids to grow up thinking about characters like Santa Claus, like the Easter Bunny, like the Tooth Fairy. And we teach our children to think about our Nelson Nash and the significance of and the importance of him in our lives. And he's no fiction, that's for sure. And so this is what we're teaching our kids. Now, this picture that you see was taken at an annual family banking meeting, and we get together as a family once a year. Our next family banking meeting is in a week and a half from now in Cancun. And we get together as a family. We talk about the family banking system. We talk about which family members are accessing policy loans, how much money is coming back to the system. All of the children participate in these family banking meetings. We involve them right from the get-go. My son, who you see here, in this particular family banking meeting, my son was recognized for having repaid his second policy loan. And in this photograph, he was 11 years young, 11, and he already understands the system. My nephew, Evan, my nephew, Ethan, who's now 16, he purchased a car recently. He's repaying his policy loans. My cousin, or nephew, Evan, purchased a brand new computer and monitor. He's repaying his policy loans and so on. The money's coming back to the family. The kids are learning a process. They're not buying a product. Now, there's a picture actually of my nephew, Ethan, signing his loan document. There's the car that he bought. My sister-in-law, Jen, and her husband, Chris, they built a home next door to us. The initiation of that construction was made possible through the family banking system. So the money's coming back. It's not leaving the family. Isn't that good? The most common question that I get asked is, Jayson, can you connect me with the right person on your team to take a look at my financial situation to show me how to become my own banker? The answer is yes. We have a Becoming Your Own Banker call that's designed exactly for that purpose. So you can click on the link that you received, or you can text the word schedule to 780-809-4599. Again, that's 780-809-4599. Text the word schedule to that number. And what you can do is reserve a date and time that works for you. And you'll be meeting with my brother, my dear friend, colleague, Joseph, and his team in Quebec. They are absolutely amazing. You're going to be in great hands. You'll have an amazing consultation to determine if we can find a basis to work together. You'll discover how this process can work for you and for your family. And the call comes at no cost. It's just an investment of your time. And don't bring any money to that call because nobody's going to ask you for any. Fair enough? Give me a Y in the chat window for yes, if that's fair enough. All right. Excellent. Excellent. Thank you. Now, I know by now, and you should know by now, deep down, that you're capable of doing this. You're capable of taking control of this function as it relates to your needs. Here's the follow-up that you can expect from us. We're going to stay in touch with you via email. Now, you can unsubscribe at any time. You'll receive an invite to schedule a time to meet. If you haven't already texted the word schedule to 780-809-4599. If we don't hear from you, then the right advisor on our team is going to extend a courtesy call to find a mutually convenient day and time to meet. And if you prefer not to meet, simply let us know. And as long as you leave happy, that's okay too. Now, over the course of your entire lifetime, I want you to think of all the money that leaves your family for things like mortgages, investments, cars, property, weddings, taxes, tuition, business loans, insurance, personal expenses, business expenses, recreational vehicles, vacations, sports, hobbies. Up to this point in your life, if you were to add up all the money that you've earned and that you've spent on all those things up to this point in your life, could you write me a check for that amount of money right now? The answer is no. And so what I'm telling you is that you should have the banking process work for you rather than work against you. Now, you don't have to get a policy or a system of policies from us. There are lots of great people out there that you can work with, but please don't try to do this alone. Households and business owners who do this, they all have a good coach. And at Ascendant Financial, we are the best coaches at the process of becoming your own banker in the country, bar none. All of our coaches are authorized infinite banking practitioners with the Nelson Nash Institute. All of our coaches practice this process in their own personal lives. So they're speaking to you and coaching you from a place of integrity and a place of authenticity. And I recommend getting a coach on our team. Think of the greats. Think of Guy Lafleur. Think of the great hockey superstars. They all needed a good coach. They never stopped getting coached. This is Ryan Nugent-Hopkins from the Edmonton Oilers. He recognizes the importance of having a good coach. And when you choose who you're going to work with, here are some things that I want you to think about. You've got to be careful about the life insurance company that you place your policies with and ensure that your policies are designed properly. We'll take care of that on your behalf. Most people who are selling you life insurance do not have expertise in this area. So make sure that you work with somebody who specializes in the process of becoming your own banker, the infinite banking concept for Canadians. Everyone on our team specializes in this process. You should choose someone who's an authorized infinite banking practitioner with the Nelson Nash Institute. All of our coaches are authorized practitioners. The reason you should do this in your life right now is because you deserve the outcome right now. The longer you wait, the more that you penalize yourself. The real questions are, what's the cost of doing nothing? Everything. What ends up happening is that nothing changes. What's the cost of just one more year of all your money leaving your family or your business permanently? Think about it. What's the cost of giving up all the interest that your money could have otherwise earned? Schedule your call with us. It's included with this webinar. Click the link or text the word schedule to the number that you see on the screen and reserve that day and time. So here's a quick recap. The difference between you getting stressed or staying relaxed financially is who controls the banking function in your life. That's truth number one. You don't have to put your money in prison for decades and rely upon someone else to achieve the financial abundance that you deserve today. That's truth number two. You don't have to be rich to become your own banker. That's truth number three. Now, you're probably thinking, okay, this process looks awesome, but how will I know if this will work for me? Schedule your call. If you book your call before the end of this webinar, here's what you're going to get. You're going to get a one-on-one conversation with an authorized infinite banking practitioner on our team. You're going to receive free access to an online video series that has a $49 value from the Nelson Nash Institute. So these are videos that are recorded directly from the Institute describing the foundations of the infinite banking concept. That'll be our gift to you. You're going to receive a clarity meeting, and that might all sound great to you, and you might be thinking, okay, but I don't want to do this alone. You get lifetime mentoring, quarterly group client coaching sessions. You get access to our online client portal. And I want to show you, I want to give you a glimpse into the online client portal because I'll tell you, we're quite proud of it. On the ascendantfinancial.ca website, if you can see that on my screen, we have a client login. This area of our website is reserved exclusively for existing clients. What we want people to know is that we have a treasure trove of resources that we make available to all of our clients, and it's available to you 24/7. And I'll give you an example of what that looks like. When you log into the client portal, you can see that there's an abundance of resources, pre-recorded videos, all this content. For example, we host a quarterly group client coaching session, and what we do is we archive those sessions in the client portal. So you can go in 24/7, 365, and you can review all of those videos, all of that coaching. If you want to know how to access a policy loan, how to track it, how to repay it, our client portal has all of this information right at your fingertips. So you don't have to worry about what our hours of operation are. You've got access to take control of this function 24/7, 365, because this is all about becoming your own banker. We want you to become independent, and we're giving you all the tools and the coaching and the mentoring to achieve that. Isn't that good? And then, if you haven't already, just head on over to the YouTubes. And when you go to the YouTubes, that you can search for a channel. And what we would like you to do is search for the Banker's Vault. So this channel is named Banker's Vault. You can see that right here. And when you get there, this is what you're going to see. Just subscribe to the channel. It doesn't cost you anything to subscribe to a YouTube channel. And we post 2 videos every day to the channel. So you'll have access to all of the resources that you could ever desire on this process at your fingertips, 24/7, 365. All right. Like Nelson said, if you understand the problem, the solution will become clear and you'll know exactly what to do. If you haven't already, I want you to visit nelsonnashfilm.com. Again, that's nelsonnashfilm.com. And when you get there, you can view the 1-hour documentary film that I had commissioned on Nelson, and you can get a deeper glimpse into the essence of just how incredible this man was. I was blessed beyond the definition of good fortune to be mentored by Nelson for so many years. And the way that I repay my debt of gratitude for his generosity of time and wisdom is what we're doing tonight. I get to teach and I get to educate other people about the very same process that transformed my life and the lives of our clients coast to coast. We've been coaching clients on this process for the past 14 years. We're going to our 15th year in July. And it's an incredible honor to be able to transform people's lives in such a positive way. Now, if all this process did was keep more money in your family or your business, would it be worth it? If all this process did was create a peaceful, stress-free financial life, would it be worth it? Here's the power of commitment to yourself. You have options. You have options right now. First option is do nothing and nothing changes. You'll continue to work your butt off for the banks and everyone else will continue getting all your money. Your second option is to schedule that call and take hold of your personal finances and put control back in your hands. If you're committed, what would you do? Are you committed? So I want you to picture this. Just take a moment and picture this. Picture a day when financial control is in your hands, not the bank, not the government, and not some risky stock market. Picture a day when your spouse leans over to you and says, thank you. Thank you for not making me wait 30 years to enjoy the lifestyle that we want today. Picture a day when your finances are exactly where you want them to be. And you know with certainty that you have the freedom to travel when you want to travel, relax when you want to relax, and serve when you want to serve. Here's another thought that I want to leave you with. I want to take you back a little bit. I'm going to age myself here. I was 24 years young, and this was in 1998. And I packed up all my belongings into a Chevy Beretta car, and I was making preparations to drive 3 days from Timmins, Ontario to Edmonton, Alberta. And when I was standing in the foyer of my dad's home, he wrapped me in a big bear hug and he said, son, I'm really proud of you. Drive carefully, call me when you get to Edmonton, and don't get any speeding tickets on your journey. I got pulled over by the RCMP right outside of Winnipeg, and I got my first speeding ticket ever. And when I arrived in Edmonton, I didn't call home. I got straight to work. And about 3 weeks later, I was sitting down to dinner with my teammates, and I remembered to call my dad. So I excused myself from the dinner table, and I made the phone call. And my stepmom, Beverly, answered the phone. And when I asked to speak to my father, she said that he's in the bathroom, and she asked if I wanted to wait for him. And I said, no, I don't have a half an hour to wait, but please let him know that I apologize for not calling sooner and that things are going really great, and I'll catch up with him as soon as I can. The very next morning, I was paged in my store to pick up an urgent phone call. So I'm standing there in the store working. It's really early in the morning. I get this page to pick up the phone. And when I picked up the phone, it was my stepmom, Beverly, and she was frantic. She told me that my father had passed away suddenly and unexpectedly. And obviously, I was devastated. And I know that it's human nature to procrastinate and to always think that there will be time. But what I learned is that you can't wait. And when my dad died unexpectedly, I felt lost. I felt regret. I felt anger. And I felt like I had let him down. And since then, I've dedicated my life to helping people just like you to live a fulfilling life right now, so you don't have any regrets later. You deserve a lifetime of no regrets. You deserve to be in control of your financial future. You deserve a lifetime of abundance. And so join me and let's get you the life that you deserve. You made the right decision to be here this evening. Thank you for committing your time. And thank you for engaging and participating. And I'll open it up now to any questions that we can tackle for the remaining 5 minutes before we give everyone the rest of their evening back. Thank you all so much for being a part of this evening's webinar, our inaugural webinar for the great folks of Quebec. Many more to come. We are going to accomplish great things in the province of Quebec. We are Canada's leading advisory on this process in the country. And so Quebec is a great compliment. And we are looking forward to serving you and to serving your family and to serving the people that you love and that you care about, and to helping them along the same journey that you're